So I think one of the biggest pain points that I always hear from people is how do you measure upside profit targets? When do you know it's time to take a profit? And I think what is important for someone to have who is in the market, and it doesn't really matter what your style of analysis is, you could be a fundamental analyst or you technical stuff, you have to have some way to say, listen, this is where I take at least a first profit. And if you don't do that, you are at risk to let emotions take over, so fear and greed, and we really can't do that. Now, if you are, for example, a fundamental analyst, you might want to make a model of the company. Let's say you're analyzing, or maybe it's a commodity, you have a commodity model, and then when the price reaches that level, you get out. What I'm going to show you guys is two ways of measuring stuff on a technical basis. There's a lot of ways of doing this. I'm going to show you guys my two favorite ways right now that I like to measure upside targets. And these may not be final ultimate upside targets, but they're like initial to good profit targets where I think it makes sense to take profits. Now again, there's a lot of ways of doing this, and I'm going to show you guys my two favorite ways. So a very simple and popular way of doing this is measuring just basically previous moves. So in this example, you can see this is actually a current stock I'm looking at. I'm going to make this a little bit larger still for you. You can take what the distance of the previous move was. So from down here to up here, you can see I drew a green arrow. You can literally copy this one and then paste it on top of here. So this stock had a nice move. Now it's consolidating. That's still taking place right now. And I simply copied and pasted it and added it at the bottom of this little consolidation period. If you want to be more aggressive, you can add it up here. So this is not actually, this is probably more than an initial profit target. The initial profit target may be like halfway up this green arrow, but it's a very simple way to say, you know what, if the stock at the latest gets up here, it has moved as much as it has from here to here out of this pattern. That's one way of doing it. Another one, and this also is a current example, is looking at the S&P 500, and I'm going to use something called Fibonacci extensions. A lot of people, I think, make Fibonacci stuff and these lines very difficult, too complicated. And I have found that if wave theories and Fibonacci and it's although that's good stuff, I think it very quickly gets too complicated for most people. Not so much intellectually to comprehend, but it gets too difficult for them to through the lens of emotions, being able to stick to those rules, because there's a lot of redrawing of the lines all the time. So one way of using an upside target measurement is as follows. And so you can see here, this is the current example. This is the S&P 500. You can see we had a very sharp rally from here in late December 2018 up into the high of the spring. Then we pulled back, and now we're doing another rally. So what I like to do is I like to use a 23.6% Fibonacci extension. If that's too much for you, if that's a mouthful, you listen to me. It's very, very simple. All you do is you take the distance of this initial move right before the consolidation period. So I took 23.6%. Why 23.6? Because that's what the Fibonacci rules dictate. So I 23.6, which is a chunk of this, like it's a quarter, literally about a quarter of this move, and I add it on top of the highs. So we take a quarter of this move and just the distance of it and add it on top of here gets us to, in this particular example, you can see the upside profit target is right here, this area right here, which on the S&P gets us to almost 3,100 right now as of the date of this recording. This is not a recommendation. I'm just trying to tell you this is a way to measure upside targets. Maybe you want to be more conservative and say 3,050 in this example, which may be more in line with what could happen. But the point is, it's a very simple way of measuring upside targets. So at the very least, when you get to an upside target like this, you want to take partial profits. And again, trading and investing is part of its analysis and part of its experience, but that only gets you maybe to like 50%. The rest, and maybe even more, is really how well you do sticking to your rules. I know some people who honestly are very bad analysts, and they have literally no experience in the market, but they're very good at sticking to basic rules. They're not making gazillions of dollars, but they're making money, and fairly consistently at that. And it's only because they are willing to stick to rules, have upside profit target measurements, they get out when something goes against them, and that's I'm telling people you can make money in the markets with very little experience as long as you're willing to stick to rules. And if you measure your targets either the way that I explained to you before, using the, let me just go back to this so we kind of recap this and summarize it. Either the very simple profit target measurement like this, right? You take the previous move, you add it to the top. This is very, very basic. Or you do what we just did with the Fibonacci extension stuff, which I know is maybe a little bit more complex for some, if you're brand new. But again, it's a very simple, you don't even need to use these Fibonacci tools. Literally, you take 23.6%, call it 24, add it to the top of this move here. You can do this all in your hand, by hand, and just draw some lines yourself, and you get to an upside target. So again, there's a lot of ways of doing this, and these are just two ways, but I have found that the simpler and the more straightforward my methods are to take an initial profit target, the better I am at actually being able to stick to it. I hope it makes sense, folks. Have a great start to the week. I'll talk to you soon.